Welcome back to Factful Finance, where we turn complex financial concepts into simple, actionable advice. Let me start with a question that's on many minds. Does a credit freeze actually affect your credit score? It's something that's been widely misunderstood. If you've been thinking about freezing your credit to protect yourself from identity theft, or you've already taken the step, you might be wondering, what happens to your credit score? Are you making a move that could hurt your financial health? Here's the truth. A credit freeze does not affect your credit score. That's right, freezing your credit doesn't change your credit score at all. But it can have other important implications for your credit activity. So let's break this down. When you freeze your credit, you're essentially locking down access to your credit reports. Credit bureaus, Equifax, Experian, and TransUnion, will prevent lenders and creditors from seeing your reports. This is great for protection against fraud and identity theft, especially in today's digital age. But here's the kicker. Because a credit freeze limits access to your credit report, it won't impact your credit score directly. Here's why. Your credit score is based on things like your payment history, the amounts you owe, your length of credit history, your types of credit, and new credit inquiries. But when your credit is frozen, the credit bureaus simply can't generate a report for a lender to pull, so no new inquiries or account openings will happen, and your credit score won't be impacted. Let's talk about some real-world scenarios. Take Olivia, for example. She decided to freeze her credit after a string of identity theft incidents in her neighborhood. She was worried that a freeze might hurt her score when she needed to open a new credit card for a balance transfer. Guess what? When she checked, her score was unaffected. The freeze didn't stop her from maintaining or improving her score. She was simply blocking unauthorized access. So, should you freeze your credit? It depends. If you're concerned about fraud or you're not planning on opening new accounts, a credit freeze is a smart choice. However, if you plan to apply for a loan or credit card in the near future, freezing your credit could delay the process since you'll need to lift the freeze temporarily for lenders to access your report. This brings us to another important point. How do you unfreeze your credit? It's a straightforward process. Just contact each of the 3 major credit bureaus and request to temporarily lift or fully remove the freeze. But be aware, it can take a few days for the change to take effect. So, if you've got a big application coming up, be sure to plan ahead. Now, let's talk numbers. According to the Federal Trade Commission, nearly 1 in 3 people in the U.S. have been victims of identity theft, making a credit freeze a critical tool for many. Protecting your personal information doesn't have to mean compromising your credit health. To wrap this up, no, freezing your credit does not affect your credit score. It's an important security measure that helps safeguard you against fraud, and it's something you should seriously consider, especially in today's digital-first world. But here's the real question. How can you use this knowledge to your advantage? Well, whether it's improving your credit score, protecting your personal info, or making smarter financial decisions, it all starts with understanding the fundamentals. If you found this information useful, you're going to love what we've got coming next. Don't forget to hit like and subscribe to stay ahead in your financial journey. And remember, this content is for educational purposes only. Always consult a certified financial professional for personalized guidance. See you in the next video.